Hey guys, Shannon from Bitcoin Bankers here, and today we're going to have a quick look at how to set up some things in TradingView and how to set up an Elliott wave, how to identify where to jump in for an Elliott wave and create an Elliott wave in your trading. Okay, this comes upon request by some people in the comments, so I really appreciate that. If you ever have any questions, I'll try to answer them if I know. Otherwise, I can refer you to somewhere that usually has a really good explanation for that information. So anyway, let's get started. We'll get straight into it. I want to try and keep this short. Okay, so this is TradingView. Okay, you can set up a free account. You just get a lot of pop-up ads, and they're a real pain in the ass, but you can click them away. So you can click on your username here, and you can just have a look at stuff. You can actually have a look at all your stuff there. You can also have a look at these here. These are people who've put up their outlooks, okay, for specific. You can follow them and all that sort of thing. And that's their outlooks for specific coins and things like that. But right now we're going to go to chart. Okay. Now, any charts that you make are usually saved up here on a cloud. Okay, see, allows you to save it. But what we're going to do first is I'll just get rid of these, and I'll show you how to put them up. This area here is where you search for your particular coin or your asset, whatever you're looking for. Today we're using Bitcoin Cash. This here is your time scale. Okay, do you want to work it on a daily basis? If you're working on a day, which we are now, right now. When you do your outlook and when you do what we're doing today, your predictions, you've got to realize that you're going to make it for a much longer period of time. So if you're going to start your Elliott wave, do your Elliott wave, it goes further on, predicting out, and you might come up with a specific price. Always check where that see down here, down the bottom here, you can see it's got a date, and so you just match your final sort of estimated outcome at that date, and you'll be able to tell where a rough indication is for your outcome, okay, for your designated target. Okay, so we want to get some tools. I'm going to show you some tools, and the first ones we want to use are some indicators. So we're going to use MACD, M-A-C-D, right? Let's say moving average convergence divergence. That's what MACD means. Okay, and the other one we're going to, you don't have to close the window down, you can just put the next one straight in. RSI, Relative Strength Index. Okay, so here's our two tools. I like the MACD on the bottom, okay, and you can close these down a little bit. Now, if you want to have a good look at these particular screens and open them up, you can use this double arrow, and that means full screen. Okay, to bring it back, double arrow down again, and the same with this one. Double arrow, have a good look, see where she's going, and bring it down again. You can also put them up the top, so you just use that little arrow there, okay, and or you can bring it back down. It's up to you how you want to set things out, okay? Down the side, down here is your price. It might be dollars, it might be Bitcoin, it might be something else, depending what you choose. Generally, Bitcoin and dollars is what we use in crypto, okay? So I'm just going to delete these for a minute as well. And as I said, we're looking on the day. The other final one is that you've got two tools over here. You've got this weird little matrixy looking thing. This is where you find your Elliott impulse wave. Okay, and you use a triangle wave when you're working out the retracement. Okay, that means when the value is done its full cycle and it's actually working its way back down. All right, so you use those two. There is an ABC correction wave you can use as well, okay? But probably better to try this, and you'll notice this. Sometimes things just do a ABC retracement or correction, but you can actually do it with this one here, okay? The other one, if you need to use Fibonacci, you go into this pitchfork, and you go down to Fib retracement, okay? But we're not going to cover that and look at that stuff today. All right. So whenever you're doing a coin, when you're doing some assessments, what's this thing? Where'd that come from? There you go. That's a pitchfork thing. All right. I don't need that. It's always good first to have a look at where your support areas are, like here. Okay. And you might find that there's like resistance along here. For some reason, this has locked on for me in my thing. It seems to lock on to particular points, right? So I kind of got to make sure I move it away. So anyway, we've got a bit of a channel here. You can see there's a support here, and there's another line here. Okay, this is it is a support and resistance line. This is just a support line. Okay, the difference is that these values come up and they work against a specific level, and they try and push against that. Okay, this line is creating a resistance. It's a resistance value. At some particular point in time, it comes up and breaks through there, and it should break through a few times before it's really a resistance line. But it comes up, breaks through, and then comes and settles down and creates support for a new area to lift off and grow from. Okay, so that's why it's called support and resistance. Okay, now not all lines are support and resistance lines. Okay, this here is not a support resistance line. It's just a support line. Okay, this would be a support resistance line because it's broken through, it's creating resistance, breaking through, and then creating support for it to move to another level. Okay, that's the difference. All right, so we can get rid of those for now. Anyway, we can find other areas, probably here, and there's another resistance here. Okay, and I'll put, you can put them in later, but we're looking at Elliott wave. So we want to make sure that we can see that there is decent growth. Now, there's some things that might make this a little complicated. But we'll try to keep it simple. I'm going to go to my wave, go to our impulse wave, and so where do you start from? Where along here should I start from? Okay, I'm going to start from the last red candlestick, okay, because all these are candlesticks, right? And they're a measurement of 1 day of trading, okay? So obviously it came in at the bottom and finished at the top here and went on to the next one. That's how the candlestick works. It shows where the trading began for that period of time and where it ended. If it's higher, it's going to be green in the West. Sometimes in the Chinese one, it's actually red. But they kind of work opposite. But I'm going to find the last red one, which is about here. Now, I can take it from that one, where there's been a turn, the last red, and it's growing up. Okay, you can take it from here if you like. It's really not that important, but you want to make sure there's no more red sort of moving along here. It's kind of green and starts moving up. So I'm going to take it from here. I'm going to start here. Now, the next move up, I could take it right to the top here, but that's not truly indicative of the whole day of trading, right? The body goes to here, okay? Or actually, even probably here would be better, but it's up to you. I'll show you the difference. I'll do both. Okay, so we go 1, and then immediately after this point, you see a retracement in value goes right down, drops down. Okay, and it adjusts. So that's 2. Okay, you can go to the next level. All right, and you could find. Now this is where it gets kind of tricky, right? And I'll explain why. I'm going to go up and take this to here, number 3. And then bring it down to the retracement 4 there. Okay, and then we are obviously moving to a 5, so I'll put it here and squash it down a bit. Move that up. Okay. Now, there's a few things that are not quite right about this, and I'm going to readjust this down to here. Okay, and I'll explain why. There are rules around the Elliott wave, okay, and one of them is that the end of wave 4 should not interfere with wave 1 to 2. Okay, this one shouldn't really be moving into the territory of this first wave here, because it starts to cause problems with the evaluation when you use other tools. Okay, so if you're putting it up here, you can see that 4 has actually moved into this territory and is about halfway down. You're not actually going to be able to get a good reading when you start to combine that with Fibonacci and things like that and other readings. So take it to here, because what happened, even though the price shot up, it still returned down and finished for the day. The coin still finished up for the day because it's green. Okay, but this doesn't really represent true value of what happened in the trading in that day. Okay, whereas this one would. All right, so we take it from the base there. Okay, we don't always have to go to the wick. Okay, and sometimes it's not a good idea to. That's why when you're drawing trend lines and things, you go through the wicks half the time, because it's indicative that it's gone up and down, but it hasn't stayed there, you know. So anyway, here's our base. We go to the first highest peak. There's a retracement. We go down to there, to the lowest peak. We move up to the next highest peak of growth. We move down to the end of the retracement. Okay. And then we start our final wave up. That's how it's done. Okay, that's the best way to do it. So a couple of rules, as I said before. The 4 cannot interfere between the 1 and the 2. Okay, if that makes sense. So the bottom of this wave should not be interfering with there. Okay. The second rule is the third, like 2 to 3, this part of the wave here, is not always the longest, but should never be the shortest. Okay. Now that rule can be broken occasionally, and Ripple seems to break that rule in one of the things that you may have seen me do. But generally speaking, wave 3 is a pretty strong wave, and wave 5 is usually a pretty strong wave as well. Okay, so the first one, wave 4 cannot interfere with wave 1 to 2. The second rule is 3 is usually the longer, but never the shortest. It's not always the longest, but it's never the shortest. Okay, the third rule that you can think about with Elliott wave, okay, is that if you have one retracement which is short, then the other will be greater or longer. Okay, so where one is short, the other will be long. If this one was longer, this one would be shorter. If this one's shorter, that one will be longer. Okay, that's just the way that people have noticed that moves happen and moves occur. These are the rules that they follow, and when you go into Fibonacci, you'll actually see why these matter. And if you have a look at some of my other videos, I explain why these particular rules matter when you are doing your retracement. Okay, so if we were to just quickly put a Fibonacci up here, okay, we'll start here. I'll bring it right up to well, at the moment, the way to do this, I shouldn't actually measure to here. I should measure the first wave. Okay, I'll just bring it out so it's easy to control. Measure that first wave. Okay, and its retracement. Let's go bigger. So you can see that if that's moving from here, the 0, we're measuring, we put it from the bottom to the top because retracement measures from 0 to 1 in reverse. Yeah. Okay, that's why we do it this way. I do it this way. Other people will start with 1 at the top and bring it down. They'd also start with it way up here as well, but it's not, again, it's not showing. The retracement essentially is not starting up here. That's why we're not pulling it up there. Okay, the retracement starts here next to this candle, not up here. All right. Whoop. No, I didn't want that. Okay. So looking at the Fibonacci here, we've just measured our first wave. Okay. And we've seen that it's gone from, let's have a look. If we take it from that point, it's gone down and retraced to about 40%. Okay, maybe 42%. If we go on the next one, and we bring our, let's bring it down, and we bring our Fibonacci, we bring our base to here, and extend to the next level. Okay, and we can see in this one that it's actually moved to the 618. So therefore this one is a lot longer. It is deeper than the first retracement. Okay, and then it has to make up that ground and continue on up to the top, wherever 5 may end. Okay, so that's what's going on. And then when it's done its full, let's say it's gone up and it's ended here, we can now measure our full retracement, and we can tell where it's going to go back. And normally the 618 is what they call the golden ratio. It's generally the sort of curvature of a curve, because Fibonacci is about the spiraling aspects of nature. And the 618 is where I think the greatest curvature actually happens to occur at a specific rate. So it's to do with that, and there's a whole lot more to it. So if we looked on here and this went back, we could measure. We could then use our ABC. Okay, if we were assuming that was fulfilled, and we go to here, and would say, okay, let's say that it started coming down like this. It would go to, let's say it went right past the 618, sort of hit there. Then it would probably come up to here and try and come back. Then it would sort of stop there, and then there, and then there. So that's what you'd probably be looking at generally. You know what I mean? And that's what we actually saw. If you look at my Litecoin videos, that's kind of what we saw. So the retracement kind of works a little bit differently to the Elliott wave on its ascension. Okay. It's just a different dynamic that they move, and it kind of becomes a brrr. Then as these get smaller and smaller, so if I put that there, you would notice that they start to ping pong between these two sort of levels, and they get to a point of consolidation. Okay, and that's where the price, you start seeing a whole lot of dojis, which are do we have dojis here? Yeah, kind of like these. It's a point of indecision where trading becomes equal, the equal amount of sales, equal amount of buy in the trade, and people are unable to make a decision, and one will sooner win out over the other. So the buys might win out, and then you'll have a breakout point. Okay, but this could go into XYZ if it continues to consolidate. Okay, so you'd have a 5, a 3, which is XYZ, and then you'd have probably another 5 motion, depending. Okay, it just depends on what the coin is doing, what the market is doing, and whether it continues to have that repeated consolidation that goes on and on. Okay, so consolidation and retracement are two different things. Okay, yeah, and then eventually it'll just go ka-ping and break out, and you'll have a new value and start a new cycle. So I hope that's actually helped you understand the Elliott wave a little bit more. Find the spot where the last, I'll bring this up. Okay, you can see that the last kind of red right in there, right around there, you can see that last red candlestick, and it started moving after that. Okay. The reason we jumped straight over this as well, I'll just explain this, is because there's not a fluid continual growth. It's actually falling back down and then starting to find its new level. So you always want to find the highest point, retracement. Highest point, clear retracement. Yeah. And once it sort of really stops, then the highest point. So that's how she works. Okay, so I hope that's been helpful for you. And let's just jump back to this one here. Here's my beautiful, amazing face again. Hope that's been helpful for you guys. That's Elliott wave. You can do other measurements and things on that, but that's basically how you set it all up and get your tools running in TradingView as well. But more importantly, with you got Trace Elliott, more importantly, find those support levels, find those resistance levels, and you'll be able to see where things will move in that range. Okay, and then you can Elliott wave is for really sort of looking out further, and actually I'll quickly show you that. So as you can see here, as I was saying earlier, this area here, so our long-term prediction, so I could say, well, figuratively speaking, if I wanted to be fair, I think it might even be a little higher, but it could be looking around $5,500 Bitcoin Cash around the end of January, maybe early sort of February, you know. And that, as you can see though, this is starting to move off, but generally speaking, it'll usually try and come up and follow that line up. If it continues going off, well then you have to end that cycle because it's not fulfilled itself. Okay, it hasn't fulfilled. You have to end it, and you have to basically wait for it to reconfigure itself and see where it's going to go. Okay, but for now, look, you know, that's not a problem at all that it's going off that. Okay, because that can just easily come back up. You can have a big buy-in. If we have a look at the price of it now, it's $23.49. It was almost $4,000. Okay, so it's gone back $1,700, and it's sitting in that 618 range. If we were to presume it's going there, okay, so there is a lot of ground for it to start taking off reasonably soon. Just depends on the cycle here. Let's do on the MACD. If you have a look on the RSI, it's also down in 48, so it's still quite bullish. But I think it might have to let off a little more steam yet. A little more steam. I just have to wait and see where it goes. That's what I mean. This doesn't tell you everything. It just gives you a bit of an idea on where it can go. So you can say by end of January, we might be looking at $5,000. So that means something pretty spectacular is going to have to happen between now and then. That's a month, you know. And trust me, in crypto, anything can happen in a month. Anything can happen in 2 days. It's pretty amazing. Anyway, I'll leave it at that, guys. I hope that's been helpful, and I'll see you next time. Cheers.